Hello, everybody. Welcome to Mr. Keith's Money Monday. This is a special Tuesday edition. Yesterday, I was decorating a bunch of Chick-fil-A's for Cow Appreciation Day, which is today, the 14th. So if you dress up like a cow, you can go get a free entree at Chick-fil-A's nationwide. So I was decorating 8 stores yesterday, so didn't have time to do a video or see what the market was doing. So we're going to do our video today. Go down. Remember, the goal of this account is to deposit $500 a week from money I make from gig work. So I made some money yesterday doing balloons. So I'm going to add that money into the account today. And we're trying to grow this account to $100,000 in 3 years. Remember, this is a journey of my account, and I share it with you for informational purposes only. I'm not providing legal, accounting, or financial advice or services, and this is not a solicitation or recommendation to buy or sell any stocks or options. If you choose to copy these trades, understand that it is your money and your responsibility. No magic formula to getting rich. Please do not invest with money you can't afford to lose, and use a paper trade account until you're ready to use real money. If you'd like to follow along and be notified, please like and subscribe to the channel if you want to follow along. All right, so we're in July, and July, we went through June, usually a flat month. July usually pops up a little bit. And then we get into August, September. Those are the 2 months where the market in the past has averaged going down. And it's always tough to do trades this time of year because the options we're placing in July are expiring in August and September usually. Usually we're 30 to 60 days out. So it's tough to say, especially if you do put credit spreads. What the market could do. Could keep going up, could go down. So it's always a little bit harder to trade this time of year. You can see the rest of the year, it's usually up. So doing put credit spreads is usually pretty easy. Most part, it's going to go up. So, as I said, this time of year it's a little trickier, but we'll make some trades anyway, and we'll manage them if we need to. All right, so far in the account right now, we have 2 trades active. We have IBRX and CCL. We have a put credits, just a normal put, cash secured put on IBRX that'll expire this Friday, and right now that's looking okay. It's above $7 or 750, so we should be fine on that one. But we'll watch it and see. And if it goes below 750, I'll buy 100 shares. Then I've got a put credit spread on Carnival Cruise Line. Did that. Let's see, on the 6th. And we did a 24-21 spread and got paid $32 for that. And it's dropped down since a little bit, so this is actually you can get a better price if you enter it today. But those 2 trades we got going on right now. Ran a screener to look for potential candidates to see what we do, and it's tough again this time of year because we're entering earnings seasons also. So a bunch of companies will be reporting earnings and then guidance for the rest of the year, for the next year. Always hard to tell what's going to happen. So I ran a screener, and I'll just go through this real quick. Description, market cap, I want mid-sized stocks, price over $10, dividend yield positive. I want stocks that companies that are going to pay me money. Average volume over 2 million. That means they're pretty liquid, and the options are usually there, and optionable and shortable. Fundamental, I went in, and there we go. Fundamental. They keep it. There we go. And we get the advertisements. All right, PE under 30. Don't want anything that's over valued right now. Earnings per share. We want the company to be growing earnings the next year, so we just said it has to be positive. I want the forward PE to be under 30, and I want earnings per share growth next year to be positive also. Looking for a PEG ratio under 1 and EV over EBITDA under 10. And I came up with 37 stocks. And here's the first page. You can see that one. And the second page here, looking at that one. And I looked at Schwab, looked at Siri, looked at Synchrony, however you want to pronounce that one. Newmont's up here. I've traded that one before. One that got my attention that I think I'm going to do the trade on today is H&R Block. Those people that do your taxes and everything else they do. So I clicked on this one, and I'll show you. You can see it up here. You can see the stock chart had a big drop. I a couple years ago, I traded this and shorted it, thinking it was going to go down. So I was selling call spreads on top. It came down, hit a bottom down here, and is now coming back up. So looking at that, I was like, well, something that could be coming back up. We could put a put credit spread down here and possibly buy it if it goes cheaper. You know, maybe a 35. It drops back down here, right in that zone. Looking at the fundamentals here, this is on FinViz, free site you can go to. I was looking at dividend. The payout ratio is only 32%. That's fine. That means they got plenty of money to pay out the dividend and possibly increase it. Look at the PEG ratios under 1, PE ratios under 10. That's down 7. That's pretty low. But then this is what caught my attention down here. The earnings per share has been growing since 2019. Every year. Sales have been coming up. And then shares outstanding. Back here in 2017, they had 209. These are probably in, I don't know what these are, millions, whatever it is. But you can see they've been buying back shares. So there's less shares out there now. So they're improving the value of the stock by buying back their own shares. So that's nice to see also. So with that said, this was a good candidate. You can go and look at other things. Short ratios, not much being shorted, I don't think right now. RSI is at 63. That's in the middle of the range, I think. We can look at that. So I like that. So hanging out right there. So that's what I was looking at. The other thing I normally look at, they do have earnings coming up. That's one concern, but we'll go through that. The other trade I'm going to do is probably on silver. Silver doesn't have earnings because it's just silver, and it's been dropping down. Let's get into the account here. SpaceX, if you remember last month, I was able to get on the IPO and get one share of SpaceX at 135. Robinhood didn't want me to sell it for 30 days at least because that's considered flipping, and they could suspend you from getting other IPOs. So I was waiting the 30 days. And I think I went 30 days. I'd have to look back and see when I got SpaceX. Let's see if I can see when I got SpaceX. Got on the 12th. So technically, it got filled. It didn't get filled on the 11th. I placed that order. So what I did was place a stop limit sell and said if it dropped below 41 bucks, sell it at 41. So I placed that on the 11th. I don't think it got filled until Monday. Let me look. Yeah, the 11th was a Saturday, so it couldn't have got filled there. So it actually got filled on the 13th. So just made the 30 days, made $6 on the stock, but now I don't have SpaceX. Woohoo. Not bad. All right. You can see we did the IBRX, the Carnival Cruise Line, but let's get into doing this trade. First, let's do the HRB trade. I did add $1,000 from my balloon side gig from yesterday, so I added that into the account. H&R Block, pull up the year to date, same chart we were looking at the other thing. On FinViz, hit a double bottom down here, came up, came back down, is up, and it's above here. So it's above the 39.80. So it looks like it's making its uptrend, going up. So we'll see how it goes. Wouldn't mind owning this. I may do a trade in the other account to see if I can buy some shares. All right. So I want to go to trade HRB options. I'm looking to sell a put, and I want to go out to just August, 38 days. They don't have the September yet, so I couldn't go out there, and October is a little too far for me, so we're just going to go to the August one. Looking down here, the delta. Remember, I like to do a delta of about 15, so the 40 is a little too close. Don't quite have the money there to buy this one yet, so I'm going to drop down to 35. That gets us close to that 15 delta, and then I'm going to sell this one, 68, and I'm going to buy. You can see the risk graph over here. You can see if I just sold the put, I would make 65 bucks. It won't let me do that because I don't have enough money in this account, I believe. So right now I've got to do a spread where I'm going to buy my insurance. So if it drops below 35, I get to put the stock. If it drops below 30, I get to put it to somebody else. So by clicking on that, changes the risk graph. You can see now I'm only making 43 bucks instead of the 68. So we're only trading a $25 difference here. But for that 25 bucks, we get insurance that we can only lose 457 bucks. Now is H&R Block going to go bankrupt in a month? Probably not. But you never know what could happen in the market, especially August, September. So this is just my insurance that if it drops below 30, we can get out and do something else. So max gain 43 bucks, max loss $457 because we are getting that 43 bucks. And break even point, it would have to drop down to all the way to 34.57 to break even. So that's almost a 6-point drop there, over a 6-point drop. So I like that one. So I hit continue and review the order, putting up 500 collateral, and price. No, let's see, contracts. No, I'm good. I like before that. All right, into that one. Oh, they want me to enter my own price. So let's put the 0.43. Review order and submit it. All right, so that is placed. I may have to fiddle with it to get filled, so we'll see. It's got a wide bid-ask spread there. I'm not quite sure why. Let's see if I can click on one of them. Bid-ask, that's between 35 and 90 on that one. And this one is between 5 and 45, so we'll see what happens. We'll see if we can get filled there. It may go a little bit lower. 35 is probably the lowest I would go on that. So I'll leave that in there and I'll fiddle with it. All right, next one, we're talking about silver. Usually I've done monthly options on this one, but silver, since it hit its peak, if I go for the year, since it's hit its peak, it's just been coming down. So I haven't done any. I've done a couple put credit spreads and I haven't been assigned on any of them. They've expired just before it tends to drop again. This one I'm liking it now, just because it's kind of settling into this range here, the $50 range, and no guarantee it could come lower, could come back down, hit 49, 48 here, this double top before it took off. Also, I'm looking at this, if you've ever studied Elliott wave goes in 5 cycles, either up or down. From this high, there's a wave down, so 1, and then second wave, it comes back up, third wave goes down again, and goes lower than this one. 1, 2, 3. The fourth wave goes back up, doesn't quite hit the top from the last one, and then the fifth wave comes down. And once you hit a fifth wave, usually you have a little correction up, a little correction, 3 waves going up. So it's 5 coming down, and then 3 kind of going back up. So I'm going to place a trade thinking that it's not going to go down farther right now for the next month. So Elliott wave, 5 cycles, 1, 2, 3, 4, 5, and then we should get a 1, 2, and a 3 kind of popping back up. So it could pop back up into the 34, 35 range, maybe not that high, but somewhere in there is what I would think. But for what I'm doing, I do the put credit spreads, thinking it's just not going to go lower. So trading silver options, selling a put for August, and I could go, let's look at this. What day was I looking at? I was looking at 8/21 again. So both of these 8/21. Looking at the delta again, trying to get down to about 15. So we hit 21 there and we hit 11 there, and you can see it goes from $48 to 45. So that would be a 3-point spread, and you could probably get almost 50 cents for that, 50 bucks. If I want to be a little safer, I could go the 45.40. That'd be a 5-point spread, and I'd make 30 some dollars there. So that's a tough one to go between, making that decision. Do you go for a little bit more money but a little higher risk? because it could come down to 48, but you only got a 3-point spread, or do you do the 45-40? Doing this live, so I'm trying to think. Usually I think ahead of this before I record, but that's a little above. That's a little riskier. Do I want to do it for 33 cents? That's kind of minimum. 30 to 50 is what I'm looking for on a spread. So it is it fits the range. So maybe in this one, since this is a beginner account, we'll go a little safer. Sell the put, go 45, buy. You can see the risk graph over here. If we just sold the put, we could get the 51 bucks. Could lose if silver drops down, whatever it drops down to, you can lose that money. So in case it has a big drop down, we're going to buy the 45 again in this account. So that gives us a $33 profit with a $4.67 potential loss. So I like that one. We'll go with that one in this account. So we should get $32.92 minus the 4-cent commission fee on each contract. Doing 2 contracts. Remember, we're buying one, or selling one, buying another one. Review order. You can see right here we're selling to open the 45 put, buying to open the 40 is our insurance. Submit that, and that is pending. That is placed. I'll watch that and see how it goes. All right, I'll put those in the trade journal, and I'll watch those. May have to adjust them. May have to go a little bit lower. 30 would be the lowest I would go on this one. And that's that. So have a good day. Any questions, put them in the comments. Bye.